When we look forward to 2015, we see a number of key factors that are going to shape the market environment. The first one of those is that when we look globally, we think the US economy is recovering, but it's not going to be a strong recovery. So we're not going to get a shock on interest rates from the US. And that's important because it preserves the sort of low interest rate world that we're experiencing. The second thing we see is in the Chinese economy, continuation of the slowing of growth, but no shock. And so that's constructive for Australia because it means we're not going to have to deal with some unexpected deterioration in our key trading partner. When we look at Australia though, what we see is the continuation of the mining capex slowdown, so headwinds for the economy there. Companies spending less on investment, or certainly not increasing that investment spend. So the central bank is going to have to keep interest rates low. And that means that this environment where people are searching for yield will continue, and companies that can generate that yield and generate the cash flow that supports good distributions are going to be successful. So that's one of the key themes in the portfolios looking forward to 2015. So when it comes to identifying the right yield stocks or the right defensive stocks, you still need to be very careful because we've had a few years now where the market has rotated to those names, the valuations have increased. So it's not a straightforward exercise anymore of just picking high yield. So what we're looking for is either companies that have the ability to surprise on the upside in terms of dividends or capital returns of some form. And that's a really important aspect of the investment portfolio. So a company like Telstra, where capex spend is falling, their ability to distribute therefore is improving. Suncorp, a company that has the ability to pay more special dividends. These are the opportunities that we can identify rather than just picking any stock with a certain level of yield. The resource sector continues to face a number of challenges, and we remain still quite cautious on the near-term outlook. Now, the nature of the commodity industry is such that these things play out quite quickly, and that's what we're seeing. So we expect to see opportunities presenting themselves during 2015 in the resource sector, but at the moment, with the anticipation of further commodity price falls, we feel it's still a little early to be moving back into that sector.